Welcome to Looking at the Markets with David Modell. Today we're going to talk about a super important topic. It's how to control your emotions when trading stocks or options. Emotional trading can blow up your account, so you must get your emotions under control. This is necessary. If your emotions are controlling your trading, you're going to end up, it's hard enough to win this game of trading already. And if you're going to use emotions rather than data or information to guide your trading, then you're going to end up with a lot of emotional distress and your bank account will suffer as well. So what are the two emotions that control both the markets and individual traders? Well, if you look at this cartoon, you can see there they are, fear and greed. Those are the two primary emotions driving not only market directions, but also probably your individual decisions and mine too. You know, we're all human here. We're emotional creatures as well as rational. So it's mainly fear and greed, whatever it is that you're feeling. Whatever you're feeling as a trader or investor, it's probably related to one or both of those emotions, fear and or greed. So I'll give you some examples here. If you're feeling an excessive desire to protect your capital, that's really a form of fear. Now, you should have some desire to protect your capital, of course, and that's why we hedge whenever we trade or invest, or at least we should. But when it becomes excessive, that's really fear. If you are feeling a concern about leaving money on the table, that's really a form of greed. And I'm not trying to insult you by calling you greedy, okay, or fearful for that matter. It's just a feeling that you're having. And it's normal and natural because, again, we're all human here. If you're feeling hesitation to get into a trade, even though you know the trade is a good one, the data or the information is telling you to get into this trade, but you hesitate, that's a type of fear. And if you're not taking profits, maybe you bought something and you made a really good profit and you said you would sell, you said you would exit at this price level, and yet you don't do it, that's greed. Not taking profits when you said you would. That's a form of greed. And you need to combat this cycle of investor emotions. And it really does look like a roller coaster. And if you take a look at this, it's a great chart because it shows that euphoria is the point of maximum financial risk. And it's so funny when you're feeling euphoric, when you're feeling super greedy, that's when you're least aware of your financial risk. And when you're feeling fearful, super fearful, or when the market or when everybody else seems like they're feeling super fearful, for you, that should be viewed as a point of maximum financial opportunity. Now, I'm not telling you to catch a falling knife, as they say. You know, if a company or a sector or the market is really in trouble, I'm not telling you to buy when things are falling super fast necessarily. Okay, you might have a stock that really is in jeopardy of going out of business or whatever. I'm not telling you always to buy at that point. Don't get the wrong message from this. Okay, I'm just saying that this cycle of investor emotions is not going to serve you well as a trader. And here's a simplified form of it. This cycle will cause you, the emotional cycle, it will cause you to buy at the top and then sell at the bottom. You know, if you buy when everybody's feeling greedy and you sell when everybody is fearful, you're going to buy at the top and sell at the bottom, and you'll repeat that cycle until you blow up your account, till you lose all your money in your account. And that is not a good policy. So how do you combat this emotional trading? You do it by, first of all, becoming a contrarian. And again, I don't mean catch a falling knife or anything like that. I mean think for yourself. If you want a definition, we can give you one. Contrarian is a person who opposes or rejects popular opinion, especially in stock exchange dealing. Okay? Opposing or rejecting popular opinion, going against current practice. And that doesn't always mean doing the exact opposite of everybody else. It could just mean rejecting popular opinion. Okay, you can listen to what everybody else has to say, but you have to think for yourself and use data as your basis, use the information. So in other words, if everyone zigs, you zag. Or at least you don't have to, again, do the opposite of everybody else all the time. You just ignore popular opinion and think for yourself. That's the idea. And it takes practice to become a contrarian if you're not already a natural contrarian. So for inspiration, you can study the words and philosophies of people like Warren Buffett, Ben Graham, Paul Tudor Jones, Jim Rogers. And as you can see, contrarian timing can really pay off. Here's a chart showing that over time, contrarian timing can, not in every instance, but over time it can beat a simple buy and hold strategy. Now, if you're prone to emotional trading, here's some tips for you. You can use your online broker's platform to automate your buy points, your profit-taking points, and your stop-loss orders. Resist the temptation to just wing it or play it by ear or to use mental stop-losses. I'm not saying no one should use mental stop-losses, but again, this is if you're prone to emotional trading, you might want to forego the mental stop-losses. Choose your entry and exit prices before you make the trade and let technology take care of the rest. And that, again, instead of using mental stop losses, you can set it with your broker ahead of time. Walking away from the computer for a while, or the phone, or however you trade, is oftentimes the best way to stop your emotional trading. Now, I'm not saying if you're a day trader that you should walk away for a long period of time. That could be disastrous. Okay, if you're a day trader, you probably have to watch the monitor. You have to monitor the markets pretty constantly. But as a swing trader, I feel comfortable walking away from the markets for short periods of time. I don't mind that because, again, I want to avoid being too emotionally invested in it. Combat emotional trading by choosing your entry and exit points beforehand and stick to them. Combine this policy with a think for yourself contrarian policy, and you'll be a step closer to trading with data rather than emotions. If you'd like more help with this or with any aspect of trading, stocks, options, or financial advice or ideas, support in general, you can contact me at davidmodell@gmail.com. I'll be glad to help you. Thanks a lot and hope to hear from you sometime soon.